So this is a comparison of our population by age bracket since 1980, as well as a forecast out to 2066. So in 1980, about 10% of our population was 65 years and over, and about 1% of that was 85 years and over. So look in 2020, that now accounts, that bracket now accounts for 18%, and importantly, that 85 years and over has doubled. And looking at the population forecasts, again, that over 85 is double, and the over 65 has jumped to 23%. So 27% of our population is going to be over 65. What that means, of course, is that we're going to need more healthcare because it's just a fact of life, really, that as you get older, you tend to have to visit the doctor a bit more. You need more routine checkups. You need more operations. You need more drugs or whatever. We do need more healthcare as we tend to get older. And if the proportion of population is living, if a larger proportion of our population is living longer, we are going to need more of these medical centers. And it's not just that we need these things. And I think obviously investors know that we need these kinds of things and they are increasing their allocations to this, but they also get good returns out of it. They do get good performance out of it. So it's not just a social thing that we're seeing with investors getting into the healthcare sector. They do perform better. So this is just listed health. This is just a couple of indices here. So I'm just comparing the ASX 200 healthcare series to the AREIT series and the broader ASX 200. It's quite clear to see here, there's a real divergence of performance here. The healthcare stocks have significantly outperformed the broader market over the last decade or so. And we don't see as many shocks as well in the healthcare sector as well. So obviously we had a bit of a shock when COVID initially hit. Stock market took a bit of a plunge. Of course, it has started to recover. We didn't see that much of a plunge in the healthcare sector. And indeed, over the last 2-3 years, that healthcare sector, it really has outstripped the other sectors quite markedly. So there is a lot of money to be made in the healthcare sector. And I think that's that's a big reason why investors are getting into it. It's not just that we need more of this stuff. If there wasn't decent returns on it, you wouldn't see a lot of investors getting into that space. So I think we'll see more and more investment over in the next 5 to 10 years, not just because we need more, but the performance you get out of it as well is key. And another chart that's going to show a very similar story in terms of that kind of rise is the amount of sales volumes that we're seeing in the real estate sector. So this is annual sales volumes broken down by some of the lesser well-known care sectors, really. So childcare, hospitals, medical offices, and R&D. Now, I know there's a heap of discussion at the moment about what actually is healthcare, what is wellness. Are gyms wellness? Are gyms healthcare? Are suburban offices? Can you have a medical office in a suburban office, and can that constitute healthcare? I guess it depends entirely on your personal point of view and what your investment mandate is as to what you consider healthcare. But these are the 4 brackets I've broken it down to. Now, childcare in particular has been booming the last few years. There was a record year in 2018, a record year in 2019, a record year in 2020, and another record year this year. And what we find is that about 35% of all annual deals are done in Q4. So these numbers are just up until end of November. So I do expect there's going to be a heap more assets sold before the year is out. So I wouldn't be surprised if this care number grew significantly as well. So we might even push 2.5 billion, which will be fantastic. So why I've included R&D, again, it comes back to what your perception of healthcare is. Healthcare isn't just about a hospital. It's all the stuff that goes into hospitals. So new development in new technology for surgery, new implants, new drugs, all these kinds of things, that comes out through R&D in those life science precincts. So we classify that as part of the healthcare sector. It might not be what people think it is, but it feeds into that wider healthcare sector as well. Now, medical offices were an interesting one. Again, I know there's been recent discussion about can you have a doctor's surgery in an office building? Well, I mean, you can. They do exist. And for us, we do include in the healthcare sector. And we saw medical offices really boom last year, particularly around suburban locations. Again, as a lot of investors recognize the need for more doctor surgeries, more day surgeries, all these kinds of things. So we saw a lot of activity in that space. Hospitals are a little bit different in Australia because we have the public and private breakup, but we still do see quite a fair bit of hospital sales as well. Now, one of the other care sectors that, again, often gets overlooked is actually senior housing and nursing care. Now, I've split it out here because I didn't want to include it in the other categories because this is a much more core sector. It just often gets overlooked, but it does, again, form part of the healthcare sector. And we don't necessarily consider senior housing core in Australia, but it is definitely a core sector across the rest of the world. And if you look at the actual investors that buy into this sector, which I'll touch upon later, they're far more institutionalized because it is a much more institutionalized asset class. And in Australia, we definitely have a couple of big years where we see big portfolio deals get done. Brookfield, for example, picking up a big portfolio in 2019. And I think this is definitely one where we're seeing a lot more activity from super funds, for example, where Super picked up a 25% chunk of the Lend-Lease funds in the senior housing sector. And I think we're going to start to see more and more and more of that in the coming years, where investors buy parts of companies because they don't necessarily understand how to run these things. So they're going to partner up with somebody who does and still get the benefit of these sectors in good return performance. Now, I touched upon life sciences just now. Life science, it's all the rage, life science. Everyone's talking about life science hubs. We have a couple in Australia, Westmead. I know in Macquarie Park, they're trying to build a life sciences hub around the university hospital. They're big business. Look in the UK, you've got Oxford Precinct in Boston as well. You've got a lot of them, and it really has been the Americas that has been driving this big investment into life sciences. Not a lot in EMEA and not a lot in Asia compared to the US, but it is growing. And this year alone, we've seen almost $25 billion, 25 billion US in life science sales. Now, compare that to 2008, where it was around 2. So in just over a decade, we've gone from about 2.5 to 25. That's a big jump. And again, it's because we're seeing investors recognize the great performance that you get from healthcare assets, and they're buying into the future income stream. Now, I touched upon that before, about all these institutions getting into the sector. That's kind of how property seems to develop. If you think 15, 20 years ago, industrial wasn't considered core. So it was mostly privates, not so many institutions getting to the sector. But as the sector starts to develop, you start to see more and more institutional investment. There's a chart I show on industrial where up until 3 years ago, single asset sales made up about 80% of the market. But over the last couple of years, it's portfolio deals. Every couple of days you hear a big portfolio deal has transacted, and the split is now basically 50-50. And that's what happens when you get more and more institutional investments. And that's exactly what we're seeing in the medical center. So, the medical sector. So the bar at the bottom, this just shows the buyer composition from 2015 to 2019. We can see it's mostly private investors. The other category here you can just include as private as well. So over 50% of the sector was just private investors, a little bit of cross-border, a little bit of insto, not a lot of REITs. But over the last 18 months or 24 months now, the COVID era, we've seen a heap of listed REITs get into the sector, and also institutional investors, and they account for well over 50% of the market now. So that's a big change from the more traditional private players that pick up the smaller assets, the $5 million to $10 million medical centers, which used to make up the market. Now we're seeing much bigger acquisitions, and the bigger guys are getting into it. And of course, that means that prices only go one way, which I'll get to later on as well. But looking at just who some of those buyers are, Dexus is obviously one of the more well-known ones recently, because they've been expanding their healthcare fund quite considerably. I think at the start of the year it was around 900 million. I think now it's like 1.6, 1.7 billion. So they have really ramped that up. But as you can see on this chart quite clear, the number of private buyers, well, it's 1. So this is top 10 buyers since 2015. And there's only 1 private buyer there now. So the private buyers have been squeezed out as more of these much bigger institutions get into the sector. And we're seeing far more institutions and far more listed players get into the sector. But if you look at senior housing, again, I've split it out for this reason. This is a very institutionalized sector. Brookfield, obviously, the largest investor there because they cover big portfolios. But again, Aware Super, AusUnity, these are much more institutional investors than what we used to see in the medical space. And again, it's because the senior housing and nursing care sector, it's just slightly more developed than the medical sector. But I fully expect that the medical sector will start to go in this direction as well. And we've certainly seen that over the last couple of years with big acquisitions made by some of the bigger players such as Dexus.